Confused by the mortgage process? This episode is your step-by-step guide to getting approved and into your first home.
We are back in your life, and today's episode is about getting your first mortgage. And why do we want that mortgage, Michael?
Your mortgage is part of your first home. No one really wants the mortgage though. What you want is the home. You got to have the mortgage though. So
Be nice not to have it though.
I'd be great. I watched this thing the other night. This guy won 5 million on Lotto and he was like, honestly, paid off the mortgage. He's like, that's all I needed. He was like, apart from that, the rest is just kind of in the bank.
There are two components to getting a mortgage, right? We need to have some cash and we need to have some income.
Yep.
So tell me about the deposit. How much money do we need?
Yeah, look, so a deposit can be made up of a few different things, right? So I think it's really important when we're thinking about getting your first mortgage to buy your first home is not just how much cash do I have to have saved up in the bank, right? I think the first thing we should probably talk about there is KiwiSaver. You know, like KiwiSaver is you making genuine savings from your paycheck. And to be honest, KiwiSaver probably takes up it's 30-40% of their deposit for their first home at the moment. It could be a substantial amount of cash.
Decent size.
And I think, if we're looking at your KiwiSaver, there's some really important considerations, right? Let's say I don't have any KiwiSaver and I want to buy a house in 2 years. Should I start saving in KiwiSaver, James?
Well, makes sense to me. You can have some money.
You shouldn't, because you've got to be contributing to KiwiSaver for at least 3 years before you can take it out and use it for your deposit.
You don't say.
Yeah. So, that might be 2 years and you go on holiday OE overseas for a year, come back and contribute for another year. That's your 3 years, right? It doesn't have to be 3 consecutive years. So there's things you got to consider when you're looking at KiwiSaver as to whether or not it's the right product for you.
Yeah, and a little quick tip for you as well with the KiwiSaver. If you are planning to buy in the next few years, do not have your KiwiSaver in a growth or aggressive fund. Make sure it's in a cash fund because you've got a short-term goal. The amount of times people are in growth or aggressive funds, then the market drops, then they're like, Mike, I can't buy my house anymore. It's not worth it.
It takes, 45 minutes to get advice on KiwiSaver. It doesn't usually cost a customer anything. So it is definitely worth doing. And again, great tool. You get your employer to match some contributions there. The government will give you a little bit of cash as well. So you get some help along the way.
You know what I don't like as well? The employers where they bake in your KiwiSaver contributions into your salary. Don't do that. You just look like a knob.
All right. Now the bit that everyone struggles with, really some people are good with it, but not too many people. It's the personal savings. So it's how much are you consciously taking out of your paycheck, putting it in savings, and then leaving it there and not doing anything with it.
You spend less than you earn and it goes into a savings account. Crazy concept.
Yeah. I think where people go wrong with this is that they start with the spending first and not the savings goal first, right? And that usually leads people to not hit these goals. They start to have a really bad relationship with money, with, I can't achieve this, I can't do it, I'm doing it wrong. What you've got to do is go, what is my goal? How much do I need to save to get there? And a goal is not just, I want to buy a house. I want to buy a house for this much by this date, right? Then you work backwards. How much do I need to save per year, per month, per fortnight, per week? You do that. If you can't do that, you've got to change the goal.
Do you know it's a great option though if you're not very good at savings? The bank of mum and dad.
Yeah. Being daddy's little special boy helps quite a bit.
Look, I've told you about my favorite meme, haven't I? Getting a mortgage is so simple, okay? All you got to do is not go out for breakfast and get avocado on toast. Don't go and buy your takeaway coffees and be daddy's special boy so you get a $300,000 deposit for your first home.
Yeah. In the instance that you don't get that though, one of the easiest ways for people to get help is basically just like, look, you guys stop renting, you move back home, that rent that you were paying that we were going to charge you, we'll put that into a savings account, right?
Do you reckon you could move back home, like if you didn't own a home, and you had to move back home and but you had to live with your parents? Would that be an okay vibe? Because I could just imagine some people
I recently went through a divorce, right? My parents, probably. My parents are pretty chill, man. I'd probably be all right.
Yeah, nice.
You?
Nah. Love them.
Yeah.
Love them from afar though.
No, but I think, in terms of bank mum and dad, there's usually 3 ways that people can do it outside of, like some other assistance with living and that sort of stuff. First one, gifting. Very straightforward. Is what it says on the tin. Your parents gift you some cash to go use as a deposit for a house. You don't really need a lawyer involved. Sometimes the bank can have a gifting certificate templated. It's fairly straightforward, right? We all get that. The next way that people can do it is, let's say I want to give little Jimmy over there $300,000 to use as a deposit.
Thanks, Dad.
For his first home. But I don't like little Jimmy's partner, M. I think Em's a little bit shifty. She's from the Coomera Pits of Northland. I don't like where this is going, right?
My wife's probably not going to like either end, but anyway,
yes. Yeah, fair.
not related.
I might go, I'm not going to gift you the money. One, because it's a large amount of money, and two, because I don't really think this is going to go anywhere, but I want to help you for now. I might do what's called
You don't think the relationship's going to go anywhere?
Yeah, I might use a deed of acknowledgement of debt. And that's basically going, this is not a gift, this is a loan. Couple of really important things there. That deed of acknowledgement of debt needs to be structured in a really particular way for the bank. So it's non-interest bearing, no regular repayments, and it can only be called in after the mortgage has been completely paid off or the property has been sold, right? Now you might be going, Mike, this sounds really complex. This usually requires a lawyer. Why would we do this? Well, let's say I gave you that 300 grand and Em was like, I'm going back up to Dargaville. See you later, James. I don't want to do this anymore.
My looks have faded over time.
Yeah.
It's the only reason she was with me.
And like you guys split up. You have to sell the house usually, right? And if it was a gift, that gifting money goes into the deposit. It just becomes part of the matrimonial home. That's a matrimonial asset. They get split 50-50. If it's a loan, you got to pay that loan back, right? So you sell the house, that 300 goes back to your parents, and then you guys split what's left. So it can be a really good way of kind of helping to protect some of that money. And then the second piece might be, it's just a lot of money.
Yeah, I mean, Em thought she was getting her hands on 150 G's. Nah, look at the T's and C's.
In terms of the deed of acknowledgement of debt, yeah, slightly more complicated, might be a little more expensive to set up. But again, like there's definitely instances where you'd use that. And then the last one is equity. So let's say I've got a fully paid off house and it's got a bit of equity in it, right? Because there's no mortgage on it. I don't have the cash or the ability to go borrow to give James and Em money. I might go, hey guys, what you can do is you need an extra 100,000. Let's say you're buying $1 million property. You guys have a 100K deposit. You need another 100,000 to get to 20%. I'm going to give you $100,000 of my equity. So we're going to tie my house onto your loan, but a very small portion of it, cap it at 100 grand. And you guys can borrow against that. So that means that your equity position against your house is you'll have 20% equity and 80% loan, which is kind of where you want to get to.
Cool. Okay, so all the ways you can, find your deposit. The next piece, Mike, is deposit size matters. So let's talk about how much money you need as a percentage to be able to buy a first home.
And we'll do that after the break. Are you sick of hearing everyone telling you need 20% deposit to get into a home? Well, get in touch with Lighthouse Mortgages today. Some of our customers buy their first home with as little as 5% deposit. So if you're thinking you want to find out more, click the link in the show notes below. Now, back to the episode.
So, Mike, surely everybody needs to have a 20% deposit.
Nobody needs to have a 20% deposit.
Oh, what?
Nah, like you can buy a home with as little as a 5% deposit. Those are specialist loans, though. They're underwritten by KO, so they don't not everyone qualifies for them. There's like household income caps, 95 for a single, 150 for a couple. There's some other kind of T's and C's and regulations around it as well. But if you're thinking, I want to find out more about that, definitely get in touch with someone and have a discussion. You have to speak to a broker about this, basically. If you go to your bank and they don't do these loans, they're going to say no to you, right? So probably better you speak to a broker who knows what banks do them and how to get them.
And is it better to have, though, a bigger deposit so you're spending less interest, or is it better to buy the house earlier with a smaller deposit?
It's case by case, but generally speaking, my advice is get on the property ladder as quick as possible. Buy the house, especially at this point in the market where prices are quite low compared to what they've been. If it was 2021 and you were saying, should I buy the house with a really low deposit or should I wait? I might be saying something different. I might be like, you should probably hang off. But look, at the end of the day, if you're not in the market and the market starts moving up, you're trying to save a moving target, which can be really hard. If you're on the ladder, let's say you don't have 20% deposit, you've only got 15%, and your house price goes up 5% or 10%, like all of a sudden you've got that 20% deposit, right? If you're trying to save that deposit though, and the house price increases, that's just more that you've got to save. So my advice is usually get on the ladder as quick as possible.
Mortgage brokers versus using the bank. Now, obviously, you are incredibly biased because you are a great looking mortgage broker and, the bank around the corner, maybe they're not as good looking. But why should somebody use a mortgage broker or a bank? What are the pros and cons? Pros of the banks. Why should they use the banks? Got a lot of heart, the banks.
They've got a lot of...
Great guys and gals.
They can click yes on stuff and approve stuff that sometimes we can't get approved because they have their own lending authority.
What about better interest rates, right? Because the mortgage broker needs to get paid. Surely if I cut you out of the transaction, I'll get a better deal going with the bank directly.
No, not usually. We to be honest, at the moment, some banks do still try and give their direct customers worse interest rates. But I think there's enough general information out there now that people know what a good rate and a bad rate is. I think the issue with that is if you ask a banker what's a good rate, they will often point to their specials. Hey, we've got this 4-year at this rate or something. And although that might be their special rate, that might not be the best rate for you because of where the market is or other factors. So that can be quite limiting if you're going to a bank. Just the advice is a bit more limited. They just can't really give you advice.
Yeah. I mean, if you think about why the mortgage broking industry exists at all, it's because the banks are too big and the mortgage broker provides a better service, more personalized advice to the clients, right?
Yeah, I think there's definitely that to a degree. I think one of the other things with a mortgage broker or a mortgage advisor is that we know what bank does what. So some banks just might not have an appetite for your situation at the moment, whereas other banks might have an appetite for that. Some banks are really don't have a lot of flexibility around the property. So if there's an issue with the property, the flats plan hasn't been updated because there's a deck put on there. Maybe there's an unconsented shed that's been turned into an office out the back or something. Particular banks, that's not for them. Whereas other banks would be like, it's a shed, that's okay. We can just all insure the house and move on with this. I think knowing what banks have appetite for what deals is really important for a broker to be able to provide.
And in most cases, you won't have to pay for the mortgage broker, right?
Yeah, there's not usually any upfront costs. We're paid for our services by the bank. There's definitely instances where we charge fees. Development finance, institutional finance, clawback fees. This is
but for getting your first mortgage, incredibly unlikely.
Yeah, there's still fees and things you got to be aware of, but yeah, pretty unlikely we'd charge.
So let's say I want a mortgage, just in terms of the mechanics, what do I have to provide to be able to get my situation assessed?
Yeah, there's going to be, and here's the thing, right? Everyone's like, there's so much documentation you've got to provide. Let me just straighten this out. They're lending you a lot of money. So they want to make sure that what you're saying is true. And people will lie to get money, that's just how it works, right? The banks are under a ton of pressure from regulators and compliance. So they're going to want to see some documents. They're lending you $1 million. So basically what a bank is concerned with the mortgage application is your income, your expenses, and your deposit. How much you earn, what you spend, and how much deposit you want to contribute. Most of the documents you have to provide are really just evidence for those things, right? Income, they'll want to see some payslips, maybe an IRD summary. Expenses, they'll want to see your last 3 months of statements. Oh, do I have to provide my credit card? Yeah, if you're spending on it, they're going to want to see that. So yes, you've got to provide the credit card statements. They're just going to want to see some supporting documentation. And to be honest, if you do it through an advisor, you do it once and we can take it out to different banks.
Yeah, awesome. Next question for you, Mike. There was that period of time where you couldn't spend $12 at Kmart or get Uber Eats. Is that stuff still happening or has that gone away?
It's definitely there to a degree. They are more focused on your expenses because banks don't have a ton of flexibility anymore around, what they can reasonably assume you'd be able to afford in the future. We used to be able to say oh, yep, I know they go out every night. I know they do this. I know they spend on this. I know they have this expense. But once you buy the house, the focus is going to be the mortgage, right? So their spending is going to change. We still have the degree to do that, but it's not as liberal as it used to be, basically.
Sounds a bit depressing, eh? You could go out all the time where you can just pay the bank a lot of money.
It's definitely not as bad as when triple CFA regulation first got introduced 3 or 4 years ago, and we had no flexibility there, right? And that's when you saw people getting declined because of Uber Eats transaction or some Netflix or something like that. And to be honest, that is the bank trying to do you a favor. They can't tell you to adjust the spending. What they're saying is, no, you can't have the mortgage because of this, 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 and this. If you were reading between the lines of what the banks are trying to say, they're going, if you go away for 3 months, stop these expenses and come back to me, you can probably have the mortgage, right? They were just so hamstrung at that time as to what they could do.
Yeah. And in terms of the process, how long does it take to be told yes, you can have the mortgage?
They're pretty quick once they pick the application up. There can be like a little bit of time in terms of waiting for them to actually pick the application up. But we spend that time with our customers, like looking for properties, negotiating on properties, just doing the shopping piece. So, once they pick it up, you can reasonably expect some sort of answer in like 48 hours.
That quick.
Once they picked up the application and started looking at it, you can probably get something back in like 48 hours. Yeah.
Okay, so from end to end, from like you meet a client for the first time to pre-approval, on average, how long does it roughly take?
Probably 3 weeks. And a lot of that time is just waiting for the banks to pick up the application. A little bit of that is the start is like collating the documents and getting everything ready. But even that's pretty quick. The banks just have a really long queue of applications they're working through. And live deals usually go to the front of the queue. So if you've got a house that you've already bought, that gets to the top. So, they're all under a bit of pressure. They're trying their best, but they just got a few they got to get through. So it can take them a while to pick up the application.
I smirk at live deals because I'm just thinking about the times where you've got the phone call being like, hey, Mike, great news. I've just bought my house at auction. I need the deposit within 24 hours. I've never spoken to you before, but love the podcast. Can you help me out?
I love those calls. I think they're hilarious.
For a minute, they're funny.
Oh, yeah. Until we actually have to do the thing. But I actually think they're hilarious.
Yeah.
But yeah, look, people just go about things different ways, right? In an ideal world, we'd all go get our pre-approval. We'd all do a little bit of shopping. We'd win the first auction. We'd have our house, right? That's not the world I live in, man. Everything, you're buying a house. Things are stressful. Things are going to be last minute. I might call you 5 minutes before the auction starts and go, you got it. Like, you've got the pre-approval, go get it, right? But like, that's just the nature of buying a house.
Do you know what I was thinking about when we were doing our first home buyers webinar last night?
Yeah.
Do you reckon we could find some listeners that would let us bid at auction for them? I
love doing it. It's heaps of fun.
If you want Mike and I to go to your auction and bid on your behalf, I'm super keen.
It's a ton of fun. Auctions are really fun. They're designed to get more money out of you, but they are a ton of fun.
Yeah. So let us know and reach out if you want us to do that.
Yeah.
Okay. So Mike, let's say you've got the pre-approval. What are the T's and C's when it comes to a pre-approval?
Generally speaking, they last 90 days. Then you can roll them over for another 90 days. So you get about 6 months with these pre-approvals. It's not a guarantee. Just because we've said you can go out and borrow this, so long as you meet some conditions, you still have to get the security approved. So the house, the bank's going to know that you're not buying a lemon. The thing can be insured. It's not leaking. You're not spending $6 million on a 1-bedroom apartment in Clyde. There's like a ton of things they're going to want to go through just to make sure it's a reasonable asset for them to lend you the money on.
The other thing I just say to wrap up for those listening or maybe thinking about their friends or family who want to buy their first home, one of my favorite parts of this was when people think they're far away from buying their first home and actually you're like, you can do this now if you want to do it.
Yeah, they're like some of our favorite phone calls and people are like, all I've heard is how hard it is to get a house. I can't have avocado on toast. I need 20% deposit. And we have a call tonight. You can do it today, right? We've got examples of people like, single income households, buying their first home, bit of KiwiSaver, you throw a border in there and it's not that bad.
Yeah. Bada bing, bada boom, you got a home.
Yeah.
All right, we'll wrap it up there. Much love to Lighthouse for sponsoring this episode. Please subscribe to our YouTube channel, give us a review, give us a like, and we'll catch you next time.
Cheers.